Lower than expected natural disaster claims have helped lift first quarter earnings 49%. The world's biggest reinsurer, which of course is Munich Re. Joerg Schneider is the Chief Financial Officer. He joins us now on the phone. Good morning to you, Joerg Schneider. The numbers this time round look kind of slightly eye-watering. I'm looking at a combined ratio of 88.6. The market was looking for a 93.6. That's really quite a standout number. Lower natural disasters, obviously a factor in this. Is this just a one-off? Is this just a blip?
Good morning. No, I wouldn't call it a blip. We had a good start into the year, but it's clear for your reinsurer that there's volatility of major losses. And what also contributed here is that we could release reserves for Nat Cat of earlier quarters and years due to our very conservative reserve setting practices.
Joerg, I wonder how the euro weakness that we've seen in recent weeks has affected the euro strength in the first quarter. What do you think of the volatility of the currency?
That is, for us, a challenge. We try to cope with it by a very strict policy of congruent coverage. That means the differences in assets and liabilities of the respective currencies are relatively low. Nevertheless, we have some volatility also in our numbers. And we do not expect the euro to strengthen further. So therefore, we saw some extreme in the last couple of months, in the last 12 months. So therefore, we are relaxed and we will be able to deal with it wherever it goes.
Joerg, JP Morgan CEO Jamie Dimon telling Bloomberg overnight that we shouldn't exclude the possibility of a 4% US 10-year. Do you think that we should be thinking about a 4% US 10-year, and what would that mean for Munich Re?
That has to do with the global economy. That is obvious. Most indicators are still strong, except for the geopolitical threats we are faced with. Munich Re could live with the 4%. Overall, we regarded the very low interest rate environment, especially in Europe, definitely, as being unhealthy and not good for the economy.
Let me ask a slightly different kind of question, Joerg. In the past, we've heard from Munich Re that you have no problem with the idea of an anchor investor. Indeed, it might be a good idea. Have you had talks, for example, with SoftBank as a possible anchor investor?
If we had, I wouldn't say it here. But we have a lot of very long-term investors, mostly with a share of some 1 to 2%, sometimes a little bit above. And we had Warren Buffett for a long while as our anchor investor. And they were all very satisfied, and therefore they also changed their position then. We wouldn't mind, but from a business perspective, we prefer to have selected partnerships and remain agile, because the environment is dynamic and we have to team up with the best.